Ladies and gentlemen, good day and welcome to the Wonderla Holidays Limited Q4 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Adhidev Chattopadhyay from ICICI Securities. Thank you, and over to you, sir.
Good evening, everyone. On behalf of ICICI Securities, I'd like to welcome everyone on the Wonderla Holidays Limited call today. From the management, we have with us Mr. Arun Chittilappilly, the Managing Director, and Mr. Satish Seshadri, the Chief Financial Officer. And now I'd like to hand over the call to the management for their opening remarks. Over to you, gentlemen. Thank you.
Hi, good evening, everyone. This is Arun from Wonderla Holidays. Thank you for joining us today. We would like to extend a warm welcome to all of you for this to this call to discuss the Q4 results. Very ecstatic to discuss our phenomenal performance with all of you. Record-breaking is the word I would use for describe our results and for the period in review. Across multiple key metrics, we have absolutely smashed previous records and raised our bar to unprecedented heights. FY23 was a blockbuster year for us, and we have recorded our highest EPS ever and clocking in at about 130% growth over previous peak EPS seen in FY20. The process of more than doubling our registered in terms of high footfall, revenues, EBITDA, and PAT. The dedication and strategic approach of our team have yielded remarkable results. Strong growth momentum led to an average 39% footfall growth across all parks in FY23. This was largely enabled by encouraging response from walk-ins, groups, and all aspects of our customer base. Our digital marketing strategy has been actually remarkable, and we've been able to do promotions and full crowds. We've also done marquee musical events, festivities, and occasions to visit, and our motto has create more occasions to visit Wonderla. Q4 was also the 5th consecutive quarter of double-digit growth for the company, registering 2x growth over Q4 FY20. The aggregate footfall across 3 parks this year amounted to 33 lakhs, averaging over 1 million footfalls annually per park. Again, these are all record-breaking numbers, and the full year footfall compared to pre-COVID base of FY20. Bangalore Park has 12 lakh footfalls, grown by 33%. Kochi Park with 11.4 lakhs, grew by 47%. And Hyderabad at 9.7 lakhs registered a growth of 37%. Our average ARPU for the year was 1,240 rupees, with a healthy growth in non-ticket revenue, driven by our strategic initiative to gain higher wallet share via merchandise and exciting F&B offerings. Our FY revenue is at FY23 revenue is at 429 crores, which grew by 58%. Our operating leverage led to record 49% EBITDA margin, with EBITDA at 211 crores, also doubling over the base of FY20. PAT for this physical year is 149 crores, again 2x the profit of 65 crores generated in FY20. PAT margin stands at 33%. Also the highest EPS at 26.3 rupees. Following this year with the highest profitability in our history, we've also recommended a dividend payout of rupees 2.5 per equity share. Proceeding to the financial highlights for the quarter, we had about 8 lakh footfalls, again clocking a 2x growth over Q4 of FY20. And revenue of 98 crores over a base of 42 crores for the corresponding period in FY20. EBITDA in Q4 was 42 crores against 5 crores in Q4 of FY20. And our EBITDA margin is at 43%. Being debt-free and cash-rich, the company enjoys high profitability. Q4 FY23 PAT came in at roughly 35 crores and a margin of 31%. The board of directors recently accepted the resignation of our CFO, Mr. Satish Seshadri. Our company places on record its appreciation for the invaluable contribution made during his tenure. The Wonderla family wishes him the best in his future endeavors. I'm also delighted to announce the work has commenced in our fourth park in Orissa. Construction is full swing, and we are also making headway into our Chennai project, which also will be starting shortly. Thank you all for your constant support, and now we can open for Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah, good evening, sir. Thanks for giving me the opportunity and congrats for good set of numbers. My first question is on the quarter one. So quarter one is usually strongest quarter for us. So this time in Bangalore, we have seen election period, and also there was a period of unseasonal rains as well. So considering that, do we see any impact on footfalls for this quarter, or should we expect steady state kind of a growth in Q1, especially for Bangalore for us?
We are actually okay. I mean, there was some dip in numbers here and there, but overall the numbers are growing compared to last year, and our numbers will be better than last year. Okay.
So my second question, in the media interaction, you mentioned that you are looking at ARPU growth of around 10 to 12%. So I can understand that non-ticketing revenues would have would also be growing for that. But are we also expecting some kind of a ticket price raise this year, or if we have taken any increase in the ticket prices?
We've raised our ticket prices about by 11% already. We usually do about 2 or 3 price corrections in a year. We've taken one already, so roughly about 10 to 12%.
Okay. And my last one is on the EBITDA margins. This year we have seen our EBITDA margins at around 49% highest, in past several years because of the strong operating leverage. But going ahead, should we expect our EBITDA margin stabilizing at around 45-46%, or we should expect it to stay at around 45%?
Yeah, I don't think this will probably be a high mark because now going forward we have new investment and new capex, so EBITDA margin I think might come down a bit, but overall we should be able to manage good EBITDA margin. But higher than this probably, I don't know, it's probably unrealistic.
Right. And one last effect, if I can introduce, on the Chennai project, so if you can provide some guidance that when we should expect this project to start, or still there are certain approvals?
We are planning to complete, so the government order says we have a 2-year construction period, and then we have a 10-year tax holiday on the local entertainment tax. So we hope to finish construction within the next 2 years, and then 2 years from now we hope to open this park to public.
Okay. Thanks, sir. Thanks for the opportunity. I will get back into queue. Thank you.
Thank you. Our next question comes from the line of Angad Katare with Monarch Networth. Please go ahead.
Thank you, sir, for the opportunity. First of all, congratulations on the fabulous set of numbers. My first question is a bookkeeping question. So we have reported a total ARPU for 23 is 1,243. Can you please give a split of ticket and non-ticketing
75% will be ticket and 25% will be non-ticket.
Okay. Yeah, my second question is, so we plan to shift the ratio of ticket to non-ticket from the 75-25 to 60-40. Can you please give a relative timeline for that?
See, that was a long-term objective. It's not something that we can do overnight. We hope to get to a 70-30 kind of number in the next 2 years, and then 60-40 within the next 5 years. So something like that is what we are planning.
Okay. Sir, so we are seeing frequent post-park events happening at all three parks. Can you please give a split of the total footfall compared, so for coming from these post-park events? That would be helpful.
We don't think we have, Satish, do you have numbers for the events? I don't think we have separately captured that.
We do normally about 3,000 to 5,000 footfall per event. That's what the trend has been. And these are all the mega events what we are doing. And we are also doing every fortnightly we are doing the Saturday events at the parks, which creates the momentum for us. Okay, these things helps to create some vibes and move, put out some contents out. So that's how it is being leveraged.
Okay, just to clarify, 3,000 to 5,000 includes all three parks every fortnight, right?
3,000 to 5,000 per event, per mega event.
Per event per park.
Per event per park, and the frequency is fortnight.
Not fortnight. This will be maybe once in the quarter. Yeah. So we will do about 2 events per quarter. So probably 10,000 per park per quarter, something like that.
Okay. One last question. Sir, you had started a pilot project on variable tech in Bangalore Park. Any update on that?
It's still ongoing. It takes us maybe about 6 months to a year to finish that.
Okay. Thank you so much, sir. I'll get back in queue.
Thank you.
Thank you. Our next question comes from Anupama Mudra with Aryan Capital. Please go ahead.
Yeah, first of all, congratulations for the great numbers. So my first question is, can you throw some light on your visa project, like when it is going to start and what kind of projections you have as far as revenue contribution is concerned? And the second question is regarding margins. You've seen like significant expansion in margins. So what are the drivers for this margin expansion?
Driver for margin expansion is your ticket to capex ratio. So, for example, if you are the amount of your ticket that you can charge, the ticket price that you can charge by the capex. So, if your capex is high, obviously your and if your ticket prices you're not able to charge a corresponding ticket price, then obviously your margin will come down. So that is the biggest one. Orissa project we hope to complete in, we already start work since March. So in 2 years is the timeline. So hopefully 2 years from now we will be able to open the park. Or maybe even earlier also, but 2 years is conservatively what we've done.
And what kind of contribution are we expecting from this park?
Satish can give you some numbers.
Okay, we are talking about 5 to 6 lakhs footfall, which during the year one, that has been the trend whenever new park has opened, and about the existing ARPU is what we are looking at in Orissa Park.
Okay, thank you so much.
Thank you. Our next question comes from Ejaz Lakhani with Unifi Capital. Please go ahead.
Yeah, hi. Congratulations on an excellent set of numbers. So 3 questions. First one is, I haven't fully understood the Chennai Park comments. I was still under the impression you had the local body tax concern. So is that done away with? Could you brief us a little bit on that? Because I thought that
we had asked for a 10-year waiver of the local body tax, and they have accepted that request. So we don't have that problem anymore.
Oh, okay. Yeah, and so therefore you have started construction effectively now.
We will be starting soon. Yes, but we are already preparing to start work there.
Perfect. And I've understood that. And the other thing is that the local body tax, waiver for 10 years will start once your construction period is over, or
yes.
It includes.
So there is a 2-year construction period, and then after that there will be a 10-year holiday.
Wonderful. My second one is that, if you could explain, the unit economics of how the Odisha park and which is the more asset-light park work. So, do you have, a lease payment to be made during this with state government? Your unit economics here, if you exclude the cash.
We don't have too much capex in terms of land, because that is a big saving for us. Typically, we spend between 30 to, in case of Chennai, almost 100 crores on land. So that whole component gets completely erased. We have a very minute payment of lease, so it's practically it's not a big amount at all for us. So that takes care of that takes away one big chunk of capex for us. The other thing that we will do in our asset-light parks is we will be very careful in our choice of rides and attractions. It will have a higher mix of our in-house developed rides. It will also have imported some headline grabbing attractions also. But the mix will be slightly different, and also it will cater to a tier 2 city. And also in keeping with the taste of that area and the weather and things like that. So that is how we are able to bring down the CapEx by from, let's say, 350 to 400 crores to less than 150 crores. So 150 crores will be the rough CapEx that we are planning. And we will be able to charge roughly 600 to 700 ARPU there. So that will obviously give us good footfall to investment, ARPU to investment ratio will be much higher there, or equal to what we do, like for example in a Bangalore. So we will be able to, that will work out for us. But this is the rough calculations we have for now.
Got it. Sorry, did you say the ARPU to capex ratio would be similar for a big park as well as a PPV park?
Yeah, it will be. In fact, it will be slightly more favorable, I think.
Okay, so basically, and is it fair to say that, this asset-light model is what, you would look to replicate with other state governments in the future, or are you still open to, purchasing land and then, putting up your own park?
We are not, we prefer not to do land purchase going forward, because that makes our balance sheet very heavy. We are already a very asset-heavy company, so going forward, we would like to do more of the asset-light model. But the asset-light model can be done in a tier 1 and a tier 2. So right now we are doing tier 2, but tier 1 is also possible.
Wonderful. And just, you've been, there's been an impetus at your end, to ensure that ticket sales are more retail versus the wholesale one where, you've increased the group sizes and, commission paid, you're trying to curtail that. So could you just give some color on, probably over the last, like say, couple of years back, how that retail to wholesale mix in your ticketing revenues has been?
Satish can give you some details on that.
Yeah. Yes, we have done about 33.1 lakh footfall. In that, about 13.1 is groups, and close to 20 lakhs is retail, that is walk-ins. So the ratio is about 60-40.
Wonderful. And what was this ratio, say, 3 years back prior when you did not have this endeavor?
It is just 1% here and there, that's it.
Okay, so, your recent efforts to, increase more online sales, more, convert more retail. Could you speak a little bit more about the initiatives you are doing there to increase this retail, ticket sale contribution?
So, as a policy, we like retail footfall. So we have we are constantly tweaking our discount policies to ensure that we have more retail visitors. And also, it's also a function of marketing. Our marketing strategy is also completely different. It's not a normal year, so we still did a lot of discounts to get footfalls back. And so because this is last FY23 is our first year after COVID. So our our retail to group ratio would have remained the same. But this year, I think you'll see more focus on retail as against groups, and which is the way for us. We feel that's the way for us.
Got it. And lastly, could you speak, you've spoken about, trying to use wearable technology to reduce or to observe how, people are spending time inside the park to, improve your...
Still at the piloting stage. So once we have some results, we will share.
Okay. And any efforts on building the team for, these activities, these mega 3 to 5,000? You've mentioned that you wanted to build a better team in place to execute. So this year we can expect an expansion to our leadership team. We are looking to induct a technology head, and we are looking to induct a HR head, people function. So we will see some induction to our leadership team this year. Maybe 3 people. Also, Patish has put in his paper. So we are also looking at a new CFO candidate. So 3. We can expect maybe 3 to people be added to our leadership team this year. Wonderful. And you've been speaking to other governments for similar PPP model. Any update on, say, an MP or any other state government?
They are all very bullish. In fact, Punjab and MP have been extremely bullish for a Wonderla project to come in their state. So we can expect some announcement on these 2. But we are also talking to Goa, and also maybe likely Gujarat also we will initiate some discussion. So these are some of the plans. As and when there is some result, we will keep you updated.
Thanks so much, and all the best.
Thank you.
Thank you. Our next question comes from the line of Ashwini Agarwal with Demeter Advisors. Please go ahead. Ashwini, your line is unmuted. You could please ask your question. Since there is no response from Ashwini, we move on to our next question, which is from the line of Keshav Garg with Counter Cyclical PMS. Please go ahead.
Sir, I'm trying to understand so that our 4th quarter revenue is less than the 3rd quarter revenue. But, sir, the past trend is that our 4th quarter revenue used to be more than the 3rd quarter revenue. So, sir, am I missing anything, or what is the reason for the same?
Usually our 4th quarter is lesser than 3rd quarter revenue. Are you sure you're looking at the correct number? I'm not really sure. Patish?
You're right, sir. Normally we do about 30% during the 3rd quarter footfall, and it's about 20%. That's how the...
So 4th quarter is always bigger than 3rd quarter. So I don't know.
Bigger than 3rd quarter, yes, you're right.
Sir, also, sir, we already have 250 crore net cash in our balance sheet, plus we are generating around 200 crore operating cash flow every year. And I understand that for the Chennai park, the land has already been acquired. Sir, so what I am trying to say that, sir, don't you think that we are a little too conservative in our growth, and that maybe we can take more projects simultaneously?
So we are uncomfortable doing too many projects simultaneously. We did 2 projects simultaneously now, Chennai and Odisha. That will take care of our capex for the next 2 years. But also we are, like I said just now, we are looking at new projects also. So we are building a pipeline of new projects that we can execute. So as and when our existing projects under WIP complete, we can start new projects.
So, but in the next 2 years, we won't start any new projects. That we are sure of?
Not sure. As of now, we have these 2, completely green lighted. So that we will proceed with those. as and when we get new projects, again green lighted, we will evaluate and take a decision at that point.
Sure, sir. And so lastly, sir, for this FY24 financial year, sir, I missed that you said that you have already taken some kind of price hike. And sir, so what more price hikes can we expect for this financial year?
That is a function of adding new rights and footfall growth and yield and things like that. So I'm not planning anything else, but from time to time we will do it.
Okay, so thank you very much and best of luck.
Thank you.
Thank you. Our next question comes from Dhruvesh Sangvi with Prospero Tree. Please go ahead.
Hello. Yes. Yeah. Great set of numbers, Arun. Congratulations to the team. And just one, what has been the tone for the current quarter? Because this being one of the best ones in the cyclicity of things, the coming quarters, we have already probably closing the month end for May also. So I think you have guided on 10% type of footfall growth. So are we seeing the similar trend for the 60 days? 5 to 10%. 5 to 10% is what we have predicted, and I think we will be there somewhere there. We don't know yet. Okay. But as of now, we should be able to do that. Right. So why I was asking this particularly is that particularly when we see the Kochi part, before 2020, we used to struggle around 7.5, and like we have come back with a vengeance like anything, about 11.4 lakh footfalls. Cochin and Hyderabad both have been top performers, and in fact, both continue to be very good performers. Even for the current ongoing year of FY24, you feel that on the higher base we will be able to do better than this, right? Yeah, I think so. Okay, fine. And just one more part in terms of the initiatives post-COVID that you have taken in terms of other non-ticket revenues, which predominantly in the past used to be food, let's say. But that other part of the non-ticket revenues, what is the total percentage today? Is it already significant in terms of events taking up, let's say, 5-7% of the total revenues this year, or some light on that? It will be incremental, so you can expect maybe 1 or 2% improvement in our non-ticket revenue because of this. No, sorry. What I am trying to understand is the new initiatives taken after COVID on the non-ticketing side. Are they already significant in terms of 4-5% of the total revenues, or no? So that comes in both. That comes in not only non-ticket, it comes in ticket also. So some events are ticketed. So we see a small improvement in both. Okay, fine. Thanks a lot. Thank you. Yeah.
Thank you. Our next question comes from Saurabh Datta with Minivara Asset Advisors. Please go ahead.
Yeah, hi. Thank you for the opportunity. I had a quick question on the capex side. You had earlier guided for a capex of around 9 to 10 crores per park on the higher side, which would be around 30 crores per park totally for the full year. But for FY23, the total capex is around 44 crores. So just wanted to understand, is this because of the Bhubaneswar project, or is there some one-off here?
Sorry, I didn't understand your question.
Earlier, you had guided for around 9 to 10 crores of capex per park. That should be around 30 crores.
Additional capex will be not 10 crores. It will be 10% of our top line. So if we have done for 50 crores this year, we will keep aside 45 crores for capex in our existing projects.
Okay, so 10 crores of the top line will be...
It will be 10% of our top line we will use for new capex.
Okay, understood. Secondly, a previous participant asked a similar question. I just wanted to understand that since our future products are likely to be asset light, and we would be generating around 200 crores of cash flow every year and have a capex of 30 crores or maybe a mark every year. So our cash would swell by around 160-170 crores each year. Just wanted to understand why are we so averse to paying out dividends, higher dividends, or conducting buybacks and taking up more leverage for the expansions? Any reason for being so conservative and not using leverage for the expansions?
I mean, we have cash on hand, so we want to definitely use the cash because then we have very high capex coming our way. So we want to be prudent in our dividends. So roughly 10 to 15% of our PAT we will give out as dividend. That is the plan, and so that's what we've been doing. And I don't think we should know more than that because we have so many capex coming in our way.
Yes, but the future projects are likely to be quite asset light. There won't be any land expenditure as we just spoke about. So
it will be. It's hard to predict. So sometimes we will end up buying land also. If some geographies we may not be able to get land through the government, so we'll end up buying. So it's hard to predict. Every state has a different policy towards this. So that's why we have to be a bit conservative.
All right, sir. Understood. That's it from my side. Thank you.
Thank you. Our next question comes from the line of Jins Varghese with Tavasya Capital. Please go ahead.
Hi. Just wanted to understand two things. In terms of you've guided for about 33. So this year we've done about 33 lakh footfalls, right? So going forward, you think there is scope in Bangalore already about 11, 12 lakhs or, so is there more opportunity coming from Hyderabad because in terms of slightly lower? So are you seeing any park-specific trends in these kind of footfall growth? And also, is there any plan to kind of say expand or brownfield expansion within these parks itself to kind of increase the footfall? That was the first question. Secondly, in terms of, so obviously there is a gestation in terms of, every time you identify a project and for the project to come on stream, it's almost a 2-year kind of time frame, right? So is there any, say, acquisition opportunities or a park which is not doing well, you can take over and kind of shorten this time cycle so that there's more predictability or, the chunky growth doesn't come and there's more predictability, growth. Is that even a feasible option going forward?
So your first question is, of course, I kind of answered it in the previous question. So we will earmark roughly 10% of our top line for expanding offerings at our existing projects. So that is what we've been going a bit slow on that pre-COVID, but we are accelerating that and we will expand because our parks are pretty much running full every day, especially during summer months. So we will definitely expand so that we can have more footfall, especially during, season time. Second question, acquisitions, so we are not very bullish on acquisitions because, an existing operator will obviously want high valuation for his asset and then buying it and then modifying it to our standards is again more capex. So I think the main differentiating factor for our Wonderla park is our high efficiency in our capex. So when we acquire another company and then modify our efficiency will vanish. So we are not very, unless there is a specific opportunity, we are not that open to acquisition. We are more happy to do maybe management contracts and things like that. So that we are exploring. But that also is hard because this is a very tailor-made offering. It's not something that we can, it's not like a hotel where I can buy and rebrand it as a hotel. Building a park, usually we have to do it from scratch. So it's harder to do it. I'm not saying it's impossible, but it's harder to do it.
Okay, but you would be open to something like that, right? So just because, because the growth will be very organic now, right? At least for the next year and a half, we're only looking at a small increase in, say, realization and some, increase in footfall, but a big chunk of growth will only come maybe in FY25 later half.
Yeah.
In future, if you can smoothen this or, any thought process to it. So that is what I was trying to figure out because there is cash generation.
There are not too many amusement parks also, right? So that is the other challenge because there are not that many parks available in India and whatever is available, people are willing to sell it. It's usually because of high real estate value they want to unlock, and we don't buy high value real estate. as a policy. So we always look for cheaper real estate. So those are some conflicting requirements. So based on that, it's not that easy to find properties to buy or acquire.
Thanks a lot, and all the best. Thank you.
Thank you.
Thank you. Our next question comes from Sakshi Chabra with Swan Investment. Please go ahead.
Hi. So I wanted to understand that usually in Q1 we do 40% of our total revenue, but based on our great Q4 performance, the Q1 was contributed around 35%. So based on the new events and all that we are doing, are you seeing a change in the seasonality going forward?
Yeah, so our new strategy to kind of move away from seasonality and to get uniform footfalls throughout the year. So that is some have to work on that, and so that's something that we hope to achieve this year also.
Okay, thank you.
Thank you. Our next question comes from Ashwini Agarwal with Demeter Advisors. Please go ahead. Ashwini, your line is unmuted. Please go ahead. Since there is no response from Ashwini, we move on to our next question from the line of Rahil Shah with Crown Capital. Please go ahead.
Hello, good evening.
Yes.
So, you're already existing in 3 locations, right? You've been present there for a long time now, and recently you moved to Odisha. You moved a bit towards the east now. So, have you considered any other regions across India? Do you have any plans in the future to do so?
I just answered that. We have new projects that we are looking at in larger tier 1 and tier 2 cities across the country. So we are talking to a few state governments to see, whether we could do projects there. So as and when we have confirmed news, we will share with you. But we are looking at Punjab, we are looking at Gujarat, we are looking at Madhya Pradesh, we are looking at Goa.
Okay. Sorry, I missed that. But thank you for repeating. And can you also repeat for me what capex you plan for Odisha?
150 crores.
150 crores. Okay. And so given you just mentioned that you want...
Your questions are mostly repeated, so if you could do your research and then come back, it will be nice.
This is my last question, and I just want to ask, you said you'll be moving away from salary and try and have uniform footfalls throughout the year. So as for this year, and someone mentioned that you will see meager growth given Odisha will be coming up in FY25. So what kind of, can you give any outlook for FY24 in terms of top line?
Sorry, we don't do that kind of, I told you, right, we can't give you a clear guidance because we are looking at a 5 to 10% footfall growth and a 10% ARPU growth, 10 to 12%. So that should give you a range.
Okay, no problem. Thank you.
Thank you. Our next question comes from Dhruvesh Sangvi with Prospero Tree. Please go ahead.
Yeah, just also wanted to ask you, did you even consider Imagica and participate in the possible restructuring which went through? I just wanted to understand the rationale. I mean, I understand that it's over, but if we did not participate, why not, etc., and some background thought on what went inside your mind.
So we were approached by Imagica. It's just that we didn't want to do a 500-600 crore capex that time during COVID, and like I said, we are doing more asset-light kind of model now, which is what we were more comfortable doing. Also, like I said, Imagica was built with a different philosophy in mind. They have very high capex rides, and so for us, getting it to our standards would have been even more expensive. After buying it, we would have had to invest more. So these are some of the reasons why it's
Okay, fine. Thanks a lot.
Thanks.
Thank you. Our next question comes from Angad Kaddare with Monarch Network. Please go ahead.
Yeah, thank you again for the opportunity. Just one clarification. You mentioned the Bhubaneswar Park ARPU will be around 600 rupees. Is it considering if it starts today, or are you telling that amount for FY25 when it will start?
I didn't say 600. It will be 600 to 800. It's hard to predict how the ARPU will be. We'll see based on demand. ARPU will change.
Okay.
So if you see high demand, it can go up to even 900 or more.
Okay. Thank you so much. That's it from me.
Yeah.
Thank you. Ladies and gentlemen, we have reached to the end of the question and answer session. I would now like to hand the conference over to Mr. Bhavya Shah from Orient Capital. Please go ahead.
Everyone for participating in this call today. I'd also like to thank the management of Wonderla for taking time out and answering all the questions today. Orient Capital is the investor relations advisor to Wonderla Holidays. For any queries, please feel free to get in touch with us. Thank you so much.
Thank you.
Thank you all for the call, for attending this call.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.